Well, mortgages are in the news, so let's talk about it. Read you a couple headlines. Washington Times, Biden to hike payments for good credit homebuyers to subsidize high-risk mortgages. New York Post, how the U.S. is subsidizing high-risk homebuyers at the cost of those with good credit. And finally, Fox News, Biden rule will redistribute high-risk loan costs to homebuyers with good credit. Guys, I'm Tara Ryan with Fairway Mortgage. Today's tip from Tara is about what's going on with the news cycle regarding mortgages and how you can answer questions from your clients. What we're talking about is changes to the LLPAs. That stands for loan level price adjustments. You might recall we talked about this a few weeks ago in another video. Some big changes were announced, and basically LLPA is a matrix. It's always existed in Fannie Mae and Freddie Mac world in how we price conventional loans. Think of it like a chart, a matrix, where it shows the down payment, the credit score, and various other features of the loan, and each of those kind of add to the price of the loan. So for example, this is where we get the adjustment for a condo. A condo is a little bit of a premium compared to a home that's not a condo. Same for investment properties. They have an adjustment, a rather large one. Or multi-units, say if you're buying a duplex or a quad, there would be adjustment for that as well. Right? So this has always existed, but what changed? Well, a few months ago, they announced that effective May 1st, the matrix was being updated. And what they did is they made the pricing adjustments smaller for our smaller down payment buyers and those with lower credit scores. It's an attempt to make homes more affordable at a time when home prices have gone up. At the same time, interest rates have gone up. And so it's an attempt to, hey, can we increase the affordability for folks in that bracket? It's specifically our first-time home buyers who are just starting out with smaller down payments and potentially just starting to build their credit. However, they did this by increasing the cost for the top credit score buyers in a move that's not really intuitive, right? It's kind of counterintuitive. So for your top credit, especially those with 20% and 15% down, and 20% down being the most common bucket we see, those buyers are now paying more of a premium than before. It works out to about 0.25% increase in the interest rate for buyers in that bucket. So those are the changes. I don't have any view or opinion. I just want to state the facts. It is becoming politicized. I certainly want to stay away from that, but I want you to be able to answer the questions, right? These agencies have made this decision. It has been implemented, and that is an impact to the interest rates. You should know it's across all lenders, and so buyers should just shop for mortgages as they always have. Okay, there's really no change, but you need to be aware that this is what's being talked about at very high levels and throughout the media. Some good news. Remember, I was very concerned about a new adjustment that they had added for debt to income ratio. And I'm very passionate that that should not be a factor in the pricing of the loan because that debt to income calculation is so sensitive and changes throughout the loan process. An underwriter may view the income a little differently than the processor or the loan originator. It may be that the homeowner's insurance was pricier than expected, or perhaps we need flood insurance. All of those things can move the debt to income ratio, and I think it is just not okay for that to impact the borrower's rate once they're already under contract, already locked, and already in process. The good news is they have delayed the implementation of the debt to income adjuster until August, and all hopes in the industry are that they will get rid of it altogether. I'm not sure we can say the same for these changes to the LLPAs. Most likely they are here to stay, so you need to be up to date on what happened and why, so you can answer questions and be of service to your clients. Guys, if you or your customers have any questions, you know we're here for you. Remember, we're open 7 days a week, and if you like this kind of content, please like and subscribe so we can get more of it to you. As always, we're here to help.